we're going to calculate the cost of goods sold and the ending inventory using the LIFO method under the periodic inventory system. We've got ABC Inc., and they have the following inventory transactions for the month of May. We've got opening inventory 50 units, $230 each. Then we have 4 purchases throughout the month. And an inventory count on May 31st indicates that 62 units are on hand at the end of May. So let's begin by looking at the formula we're going to use. We're going to do it using units and costs, but we're going to start with units. So we're going to start with the opening inventory. And we can see that the units are 50 units. We're then going to add in the purchases, either the cost or the units. In this case, I'm going to take the units. So we've got the 35, 25, 30, and 30. Add those two things together. That is going to be equal to the units that were available for sale throughout the period. 170 units. Now, if we deduct the ending inventory, which we know is going to be 62 units, we can then use that information to calculate how many units would be sold or gotten rid of, cost of goods sold. So this is going to be equal to cost of goods sold. In this case, the units. So going to add these two together. Available for sale, 170 units minus the ending inventory of 62 units tells us that the cost of goods sold is going to be 108 units. Now, can we determine some of the costs? And we can. We know the opening inventory is 11,500. We know the cost of the purchases are going to be all 4 purchases throughout the period. So that's 29,465. If we add those two amounts together, it will tell us exactly how much is available for sale throughout the period. 40,965. Now, I don't have the cost of the ending inventory or the cost of goods sold. I have to calculate that, and I'm going to do it using LIFO. Remember, last in, first out. So the items that were last in are the first to go out to the customers. The items that were sitting at the beginning of the period are the ones that are still sitting on the shelf. So if I am calculating the ending inventory, I have to start at the top of the chart. Just going to insert an arrow. I'm going to start at the top of the chart to value the ending inventory because the old stuff is sitting on the shelf. The new stuff is already gone to the customer. So if I'm valuing ending inventory, I start at the top of the chart. So I'm going to start with 50 units. $230 each. That's 11,500. I have 62 units. So looking at those 62 units, I'm going to deduct the 50 units that I've already taken into account, 12 units. Those 12 units are going to come from the first purchase of 35 at $240 per unit. I do the math. And when I add these two amounts together, that is going to be equal, there we go, that's equal to the ending inventory. So if I put the ending inventory in here, 14,380, and I do my math, the value of the cost of goods sold is 26,585. So I've got the cost of goods sold, 108 units, 26,585, and I also have the ending inventory. And keep in mind, the ending inventory comes from the beginning of the chart, right? 50 units from the opening inventory, the beginning inventory, and then 12 units from the first purchase. Now, can I calculate instead of ending inventory? I'm just going to delete all this. Can I instead calculate the cost of goods sold? Absolutely. If I'm calculating the cost of goods sold, the last items were the first shipped out to the customer. So in this case, I'm actually going to start at the bottom of the chart and work my way up. Just going to change the color. So if I'm calculating cost of goods sold, I have to start at the bottom of the chart and I have to use the 108. So looking at this, I know that the last ones I purchased, 30 units at $250, they're definitely gone because 100, yeah. The 30 units at $248 each, yep, they're gone to the customer too. Now, I'm still not close to my 108 because if I take that 108 and I subtract the 30 and subtract the 30, I still have 48 that I have to take into account. So looking at the next purchase, that's 25 at $245 each. These are all gone to the customers. Now, let's look at it. 108, subtract the 30, subtract the next 30, subtract those 25, 23. So I can see that 23 units that we sold come from this purchase of 35 units, $240 each. I'm going to do the math. There we go. If I add these all up, this is the value of the cost of goods sold, $26,585. If I fill this out, I can then calculate the ending inventory. Take the cost of goods sold, deduct the available for sale, the difference, 14,380, that is the ending inventory. So remember, if I want to calculate the ending inventory, I'm always going to start at the top and go down. If I want to calculate the cost of goods sold, I'm going to start at the bottom and go up. That's how to calculate the cost of goods sold and the ending inventory under the LIFO system periodic inventory.